Business Insights on 13th of July 2020, the Business Insights 10th episode since we started. And we're very excited to bring you this webinar series. It's hosted weekly on Mondays at midday by a panel of industry thought leaders or business owners who simply want to be in the know about the latest and most important news and initiatives in the Australian business landscape that impact how they do business. Our panel of advisors aim to inform, educate and provide strategic insights to the changes in the economic, legislative and financial landscape that affects small business. We aim to guide our viewers to navigate business challenges through COVID-19 and beyond. So let's meet our panel of industry thought leaders. First to introduce is Mr. Alan Lysle from O'Brien Palmer.
Good afternoon, Sam. Thanks for having me.
Great to have you on. Next, Bernard Turmeo from MGA Insurance Brokers.
Morning, Sam. Great to see you guys all.
Great to see you. Next, Mr. Ian McLaughlin from Imperium Accounting and Tax.
Good afternoon, Sam. Thanks very much for having me.
Thank you. Next, Liza Garrido from Enigma HR.
Hello, everybody. Welcome to Business Insights.
Fantastic. Thanks for having you on, Liza. And we have a guest speaker today, Mr. Dan Bligh from Elevate Property, who's standing in for our Rob Scheme from Oasis Scheme Property Buyers. He's having a day off, and great to have you on board, Dan.
Thanks very much, Sam, and great to be here being part of this conversation.
Fantastic. My name is Sam Gracie from Money for Private Wealth, and I'll cover off on super insurance and interest rates. I should also provide some general warnings. The view and opinions shared on this particular webinar are designed to be general in nature. They're not designed to be taken as specific advice for your personal or specific circumstances. However, please feel free to reach out to any of the panel members for any specific advice to meet your requirements. So let's get started. I'm going to start with you, Liza. What are the recent updates on employment matters?
Great, thanks, Sam. Okay, so crises such as this pandemic we're going through at the moment typically highlights gaps and issues in the workplace that we would have considered as non-critical, or we've reprioritized or simply ignored them for a whole raft of reasons, ranging from a lack of expertise in the business, lack of knowledge in the business, it could be cost minimization, or just simply non-compliance. So this week, what I'd like to do is raise some newsworthy cases, if you like, for all businesses to be aware of, particularly across the board in all the different states. So the first one I'd like to really talk about is for our viewers in Victoria while you're listening. So if you're not already aware, the Victorian Parliament has introduced a legislation making it a criminal offence for employers who withhold employee entitlements dishonestly. It would also introduce new record-keeping offences to capture employers who falsify or fail to keep records for the purposes of concealing underpayments. And a new agency called Wage Inspectorate Victoria will be created to investigate and enforce these offences. This legislation has come into effect on the 1st of July, but there will be an implementation period, obviously, that will follow. So for any Victorian employers, you will be liable to face a maximum fee of nearly $1 million if it is proven that you've dishonestly authorized or permitted another person to withhold employee entitlements owed by you as an employer to the employee. So what are these entitlements? Just to recap, these are wages, salary, allowances, gratuities, any attribution of annual leave, long service leave, meal breaks, and superannuation. And in terms of these entitlements, they need to be in accordance with the relevant laws as dictated by the modern awards, any contracts and agreements, for instance, enterprise bargaining agreements. Withholding entitlements means that you have not paid or distributed this amount to the employee, or otherwise you've deprived the employee of receiving the entitlements. The intention of the legislation is to prevent amounts payable or benefits that are attributed to the employee to be underpaid, or in fact not to be paid at all. And this will apply to any amounts that are above the minimum standard or minimum statutory award. So that's a very compelling legislation that's come out, and I think all Victorian employers need to be aware of that. And on that note, Westpac has announced it will repay, check this out, $8 million to approximately 8,000 workers who it underpaid by incorrectly calculating their long service leave entitlements. And that $8 million includes interest. The bank joins other major companies such as the Commonwealth Bank, Woolworths, and the ABC, who have admitted to underpaying staff. And this obviously comes from an audit and a review of the entitlements that they've recently made, and have now admitted that they will repay these entitlements. In Brisbane, a labour hire company was penalised over $22,000 for underpaying 80 staff members. And they've underpaid their minimum wage, they've underpaid the allowances for meal breaks, and they're now been found guilty of this and will need to actually repay this amount, including the $22,000 fine. So the Fair Work Commission has confirmed that it will apply all of these penalties across the board. Just a couple of weeks ago, I also spoke about the Fair Work Commission's conducting an annual wage review. So now it is confirmed effective the 1st of July that the highly anticipated annual wage increase, the national minimum wage, will increase by 1.75%, which brings it now to $753.90 per week. And when will this increase be applied? The wage increases will be staggered over the next 3 periods, so across different industries. So the first wage increase was on the 1st of July, covered by the Group 1 awards. And this includes, to name a few, aged care, nursing or nurses, and children's services awards. The second group of awards will be implemented on the 1st of November this year. And this includes the Clerks and Private Sector Awards and Manufacturing. And the last Group 3 awards, the increase will be implemented on the 1st of February in 2021. And that will include fast food, restaurant, and hospitality awards. So the last thing I would like to actually talk about is the issue and the matter of redundancies. Eliminating jobs, as you know, we've experienced a lot of businesses making decisions due to COVID-19 about redundancies, and it has been unavoidable in a majority of businesses. But in this pandemic period, all businesses are faced with making really tough decisions about their employees. And it is imperative that you do not take shortcuts in the redundancy process itself for a host of reasons. The first reason I'd like to cover is the risk of losing your employer brand and reputation that you've built over years being in business. Because if you've treated your employee shabbily, there are a host of digital platforms where feedback and comments can be reviewed by the general public. And what you want to do is make sure is to preserve your employer brand in this particular instance. You also want to maintain, firstly and mostly, the culture, the healthy culture of your business, ensuring that there is ongoing productivity for the employees who have actually stayed behind and who remain in your care. And if you want to preserve this reputation, you need to assure them that you have carefully considered your decisions, carefully implemented the redundancy process, and in fact have considered the support that you will provide to the outgoing employees. Compliance is the third reason why you need not to take any shortcuts. The redundancy process and compliance to this process will minimize your risk with Fair Work. And any Fair Work unfair dismissal claims or general protections adverse claims. From our experience in HR, most of the Fair Work cases really expose the contravention of due process in addition to the reasoning why you've terminated an employee. So where you can, please talk to your HR advisors, your HR managers, and about how you can support any outgoing employees that you've decided will be part of the redundancy process. Look for effective cost-effective and productive outplacement services to help them navigate through the challenges they're about to face, to help them identify new career opportunities, or in fact, new opportunities in the market. All this is what I wanted to talk about. It's not just about compliance, but it's also about keeping your organization's culture and reputation intact for the future. That's it for me.
Great, thank you, Lisa. And just goes to show that dealing with people management is very much a very big, complicated maze, and to use professional help in that area is very useful, and I would recommend it greatly to anyone.
Absolutely.
Who want to do.
Thank you.
Thanks, Lisa. So over to Bernie. Bernie, what's happening in the insurance world today?
Thanks, Sammy. I just read an article during the week from insurancenews.com. Basically, the headline read, "Pandemic exclusion upheld in travel claim dispute." So in this particular matter, a businessman was traveling to London and on the way back had a planned trip to China. This all happened in January, obviously pre the blow-up of COVID-19. Because of some of the news of the outbreak of COVID-19 happened in January, he decided to bypass China and fly directly back to Sydney. What actually happened is his policy was through his credit card insurer. Credit card insurer was Zurich Insurance. Zurich declined the claim on the basis that it does not cover pandemics or any sort of events that happen out of a pandemic. So he took his matter up to AFCA, who is the Australian Financial Complaints Authority. Australian Financial Complaints Authority upheld the decision by the insurer Zurich to decline his claim. Now, it's quite interesting that the claimant actually cited that there were other insurers that do cover this type of loss, and were covering claims up to as late as March. AFCA's response to that was basically they could obviously not comment on other insurance policies. They can only take a matter case by case basis, and in this particular matter, his insurance claim was declined. Now, one thing I will say though, had the gentleman had a corporate travel insurance paid for by the business, this would not be an issue at all. His policy would have responded. He would have been paid out for the cancellation because the corporate travel insurers products that are held through insurance brokers do cover, I guess, pandemic losses. They were paying claims up until as late as March in relation to cancellation of flights. And I guess that's what I really wanted to talk about, is that there is this misperception that going through an insurance advisor or an insurance broker is a lot more expensive, and organising it by yourself direct with the direct market is a lot cheaper and saves you time and money. This is never the case. It's always a matter to make sure that you engage in insurance advisors to review your insurance situation, review your private situation, and give you personal advice that meets your personal needs. So that's the role of an insurance broker, is to give you advice, not only general advice, but advice that is particular and meets your particular circumstances. I would strongly encourage those who have not engaged in an insurance broker and who do continue to use, I guess, the direct market, to have a conversation with an insurance broker such as myself. Now, people have returned back to businesses. Doors have opened. This is a great time for you to sit down and review your current general insurance situation and see where we can get some great advice. That's all I wanted to talk about this week. Thanks, Sam.
Okay, thanks, Benny. Just a very quick question. So does anyone still provide any pandemic insurance or not?
It's an interesting space. So when you look at all the insurance products offered in the market, there's been a lot of backlash in relation to insurers not being able to pay out claims for business insurance, business interruption insurance. Now, one of the two policies or policy products that did cover, I guess, pandemic is corporate travel insurance. Now, corporate travel, the general rule of thumb for corporate travel is when it's not intended from someone's standpoint. So obviously a pandemic is not, it's outside anyone's control. In that instance, the insurance policy does pay out. So insurers paid out as late as mid-March, because so if you had a flight back until about 15th of March, insurers were still paying claims in relation to pandemic. So what we're seeing at the moment, quickly, Sam, is that not many people are taking out corporate travel insurance because obviously no one's flying. So we've got this double-edged situation where insurers are paying out a lot of claims for corporate travel, but are not collecting any premium, because obviously people are cancelling their corporate travel insurance.
Yeah. Okay, great. Thank you. So I might just cover off very quickly on the interest rates myself. I've got to say that in the most recent week, it's been pretty quiet on the interest rate front and the banks. The only thing really coming out of the banks has been that they will continue to support deferrals on a case-to-case basis, potentially for 36 months after the September period finishes, which is, I guess, is some good news for the right people. I heard of ANZ retail say that, but the reality is that obviously at some point these loans have to be paid. It's going to be brought into account. So what I would recommend is that if you do have the opportunity to be able to make repayments, you should start some type of repayment plan, even if it is just to pay back the interest and not the principal. I recommend you do that, so you're not having interest on interest added to your loans. So competition still remains reasonably good. Variable rates sit in the mid-2s for the owner-occupier rates and high 2s to early 3s for investment rates. And the fixed rates are sitting in that range of that 2.09 to 2.39% for 2 and 3 year terms and owner-occupiers. All these rates are based on principal and interest repayments. So pretty quiet week, but certainly it's just wait and see what happens from that perspective. So let's go to our guest speaker today, Daniel Bligh, a great property management and also agent. And light us on the property update, please.
Thanks, Sam. Yes, I will start with the sales component of the week, as that's always a bit of a barometer on the market. So auction clearance rates on the weekend were 64% out of 538 properties offered in Sydney. Last year was 71%, so it's actually pretty good, the auction market in Sydney. I think a lack of stock is really propping up the numbers pretty well. So I don't see that discontinuing for another month or two. Obviously, with Victoria having a bit more hassles down there with lockdown, there is a little bit more nervousness from the market from people I've met on the weekend. But really, stock is what counts, and that's not really there to lessen the prices. In terms of property management, I met 28 groups of different people on the weekend at 6 different properties. So that's, my maths is poor, but about 4.5 people per property. So that's pretty decent. You know, about 6 weeks ago, 2 months ago, I was lucky to get 1 or 2 people per open for inspection. And these are properties across the city: Double Bay, Kensington, Darlinghurst, Chippendale, Hornsby, so Iguna. So it's interesting that we're slowly getting better in the property management sphere. And there's obviously a few suburbs which are really struggling with their vacancy rates still considerably high. Sydney CBD is at 15%, coming off a high of 18% about 6 weeks ago. But across the board in Sydney, it's around about 3.5–4% vacancy rate, which is still quite high comparatively. It's the highest it's ever been since 2005. But there are some pockets of Sydney, for example, the Northern Beaches, where houses are just in, again, short supply. And some agents there are reporting about 30% increases in rent compared to this time last year. So it's definitely location orientated, as always, real estate. It's all down to beautiful marketing, excellent communication. And if owners out there are looking to capitalise on that, they need to speak to a great agent. Thanks very much, Sam.
Thank you very much for your insight there, Daniel. That was great. So let's go to our wonderful tax accountant and advisor of the group, Mr. Ian McLaughlin. Can you give us some updates as to the different grants that might be available and any other updates about tax?
Yeah, sure, absolutely, Sam. So I'm going to start with Victoria today, and it looks like that Daniel Andrews has been very busy down there because there's a number of new grants that are coming out down there. So the first one is the Business Support Fund. So this is an expanded business support fund, which is going to provide more than 80,000 eligible businesses with a new $5,000 grant to support them through the renewed restrictions. So this grant was previously made available to the 12 postcodes that were linked to the outbreak. However, it's now going to apply to all areas under stage 3 restrictions. The second one that's coming out of Victoria is what they call the CBD Business Support Fund. So this is the Victorian government $20 million CBD Business Support Fund to help small businesses based in the CBD who are faced with large and sustained shocks to their trading environments. The third one coming out of Victoria is the Nighttime Economy Support Fund. So basically the nighttime economy is the envy of the nation, but right now the deadly pandemic means it's had to do all the heavy lifting to keep us all safe. So the Victorian government has launched a $30 million dedicated fund for the hardest hit businesses in hospitality. The fourth one coming out of Victoria, and there's a lot, is what they call the Regional Tourism Support Program. So it's a $40 million cap fund for regional tourism businesses to cover the cost of refunds that they've had to make, as well as marketing campaigns to boost visitation once the restrictions can be eased. Now, there's a similar measure in Western Australia whereby the funding is between $25,000 to $100,000 to help tourism business mobilise and adapt to different markets and market conditions during the recovery period. Now, examples of eligible expenditure there include fixed costs, overheads, things like storage, insurance, maintenance, utilities and rent, equipment deployment, activation for recovery, and then also staff recruitment and training. Now, if we move to Queensland, let's have a look at what the Queensland government's implemented. So they've got what they call the Small Business COVID-19 Adaptation Grant Program. So this is a grant of $10,000 to help businesses prepare for the safe resumption and rebuilding of their operations. So this one's very similar to the New South Wales $10,000 grant, which is now a $3,000 grant in New South Wales. And basically it is for the businesses to use the funds for financial, legal, other professional advice to support their business sustainability and diversification through this period. And also the purchase of specialized digital equipment or business specific software to move business operations online. And then obviously the other fixed overheads such as utilities and rent. In South Australia, they've got a program going on which they're referring to as Skilling South Australia. So basically they're offering up to $5,000, pardon me, for businesses that are hiring a new apprentice, and up to $1,500 reimbursed for equipment and services, including online training and working from home expenses when you hire an apprentice. So, you know, across the board, there's you know, we've got the 4 new grants coming out of Victoria, and then each state has their own specific ones. One thing that I will just touch on, that we are the 13th of July. So that means that tomorrow is the 14th, and that's the last day where people can apply for their JobKeeper June payments. So remember, after the 14th of July, you won't be able to go online and submit your application for those. So make sure that you do that so you don't miss out. Thanks very much, Sam.
Thank you for that very insightful update, Ian. I'm sure that all the people watching this will be able to use that information to get the right, grant or the support that they need. Talking about grant and support and the other side of that impact, let's go to Mr. Adam Lysle, our business advisory panelist. Adam, why don't you tell us a bit about insolvency and what's happening in that field at the moment?
Well, it's interesting, Sam. ASIC have actually released a week-by-week update in terms of the numbers of insolvencies during the pandemic, and it is fair to say that there's a downward slide of the overall numbers with insolvencies because of the moratorium that's in place. The interesting thing will be after June 30, when the final numbers come out, and of course, as and when the moratorium is lifted. It is true that the Victorian second wave, if it is a sustained second wave, will have give the government some moments of pause in terms of clawing back or folding back that moratorium, and or whether or not JobKeeper will be extended, and whether or not it's going to be extended on a state-by-state basis, or whether or not it's going to be extended on an industry-by-industry basis. I'd like to just cover off some of the stuff in support of Lisa's focus on employees today, though, if that's okay, because of course, every single time a business becomes insolvent and can't pay their employee entitlements, guess who picks up the tab? The Australian government. And this isn't cheap, and the frequency of these claims are set to rise in the coming year. In the 2018 financial year, and employees were paid about $165 million. And in the 2019 financial year, this increased to $180 million. And over 10,000 employees are left hanging every year up until now. And this is a huge impost on the Australian taxpayer. You see, every single time there's a claim, on average, is about $15,000 worth of employee entitlements that haven't been paid. And those employees are left hanging for that money for at least 6 weeks, but the average is 18 weeks. And the mental impact of that strain is going to be huge. Now, the government, just so everyone understands, the government actually pays up to 13 weeks of unpaid wages. It pays all the annual leave, it pays all the long service leave, up to 5 weeks of pay in lieu of notice, and 4 weeks of redundancy for every year of service. Importantly, though, superannuation is not covered by the federal government. And there's a clear majority of insolvencies where there is outstanding super owed to employees. So it's something that if you're an employer and you're an employee, just like Liza said before, you have a duty and a responsibility to make sure those things are paid. Now, the forecast is that despite the existing moratorium in place for forced insolvencies, it is expected that there will be a significant increase in insolvencies in this financial year. And as such, my prediction is that taxpayers could well exceed a bill of $300 million and 20,000 people left with unpaid employee entitlements. So I think the moral of all of that is that business owners should be very careful, just like Lisa's given great advice about when they're considering their decisions about closing their businesses, if they really have to. Because guess what else happens? The federal government claws back money from the directors. And in fact, last year, they clawed back $55 million from directors personally. And that's about $7,000 for every business lost. So directors often invest a lot of their own money into businesses as well. So they're set to lose even more if they don't do things properly and look after their employees. I think the moral of the story that Lisa's certainly made before, and what I'm saying here, is get advice early to prevent insolvency and disaster, as opposed to creating such a massive issue for the business and the employees. I hope that's been helpful for everyone.
Well, it certainly has, Adam. That's been really good to, I guess, get a good insight as to what everyone, especially as a director or owner of a business, you've got to be mindful and be able to deliver for your employees. Thank you. So I'm going to cover off on the markets very briefly. ASX had had a low week last week, shedding some 2.3% due to the uncertainties of the virus, and of course that looming over the whole economy. Obviously, we have our own issues here in Australia with Victoria and possibly New South Wales, and of course around the world. Interesting enough, though, the market actually opened up higher this morning on the back of US markets having a good Friday. So it just goes to show that the market still is very much a seesaw situation, and it does overreact on the positive and negative on any daily basis. Even though, for example, the US had the single day of more than 60,000 cases being recorded. This holding pattern means that basically we have to wait for a new catalyst to move the market up or down. And at this point in time, I would suggest that having plenty of patience would be the most useful thing that you could actually exercise right now. I read a really interesting article in Fin Review on the weekend, quoting Vesperum Capital. They've been tracking the investor behavior during this COVID period and as to how investors been essentially investing since March. What their observation has been that professional investors, major houses, UBS, Morgan Stanley, Macquarie, all those big guys, they're basically been net sellers of shares. And the retail investors have been the ones who have been buying all those shares and pushing up the market. And this often worries me because, essentially the smart money is leaving the market and potentially less knowledgeable money is going into the market. So be very mindful of that. I guess all I can say is that I hope that all these retail investors are not setting themselves up for a big fall and loss of capital, because ultimately that is one of the most important things that you can do to preserve your capital. So it's important that you tread very carefully at this point in time, preserve your capital. And I can only go back to the famous saying of Warren Buffett. We had a very simple 2-rule system. Rule 1, don't lose money. Rule 2, don't forget rule 1. So very nice and easy to remember that. I should also say that this webinar is obviously a live feed on Facebook. You can also catch this on YouTube. And we hope to bring that to you on LinkedIn in due course as well. So look out for that. Thank you very much for all the panelists. I thought I'll actually open up the floor to any questions. Adam, I think you had a question from a viewer.
Yeah, I've seen a question pop up on one of my Facebook feeds where Rob in Sydney was asking, are the government providing any stimulus packages to the hotel industry? Now, funnily enough, obviously Ian has comprehensively covered a lot of this, but if you're in the hotel industry, you should check out the Australian Hotels Association. They actually have a fantastic website, www.ahanewsouthwales.com.au. They go through line by line all the different packages that are available, including financial stimulus, business support grants, financial support information, and local government support as well, because a whole pile of individual local governments are providing support to various hotels, particularly in those regional areas. So Rob, thanks very much for your question. If you're involved in the hotel industry, the AHA is a fantastic advocate for hoteliers. I have consulted over the years to many hotels, pubs and clubs where they've suffered, and there's no doubt at the moment that they're suffering big time. And the best thing is to get lots of really good advice from people like Ian and the rest of the panelists here, but also to stay connected with your industry leader like the Australian Hotels Association.
Can I add to that, Adam? So Rob, if you're listening, if you're based in New South Wales, if you haven't already applied for the 3K grant, go to Service New South Wales. There's a link on the application for that, and definitely hospitality, tourism, and any related industries. There's a whole raft of different industries that will automatically get this 3K grant. And definitely hospitality and tourism, cafes, restaurants, and the like, they are automatically in that list. So please take advantage of that. There is a deadline for the application on that. If I'm not mistaken, I think it's on the 29th of July. So just double check that for me. Anyway, Service New South Wales, if you're based in New South Wales.
Thank you, Lisa. Thank you, Adam. And thank you, Rob, for your question. Is there any other questions or comments by the panelists? Dan?
Yes, Sam, the Oracle of Omaha, Mr. Warren Buffett, dumped a lot of his airline shares a couple of months ago, or maybe more. What did he invest in and why?
He's actually sitting a lot of cash, essentially. I don't know the exact number, but it is a staggering number of billions of dollars of cash that he's sitting on right now. And so I guess, it just goes to show that, he obviously he's got concerns about the tourism industry and those capital intensive businesses like an airline, because obviously it takes a lot of people and a lot of money to make those airlines fly. I guess we'll wait and see where he invests their money, but he's a very smart man. So yeah, watch out. Okay, well, thank you very much to all our panelists, Mr. Ian McLaughlin, Liza Garrido, Berta Tuamari, Dan Bligh, and Adam Lysle. And that wraps up our webinar for today. And thank you all for listening. Don't forget that you can get this on a Facebook live feed and again on YouTube. And as I said, we'll bring this to you on LinkedIn in due course as well. I thought I'd close off the day with a thought of the day for all the business owners. One from Andy Grove, the Intel founder, who says, "Bad companies are destroyed by crisis. Good companies survive them. Great companies are improved by them." So I hope that you embrace the latter and use this as an opportunity to make the most and reinvent yourself in the best way you can, so then you're successful in the future. All the very best for the week, and we'll look forward to catching up with you next week.
Thanks, Sam.
Thanks.